As of April 2026, the global order is facing a synchronized failure. We are monitoring a 24 to 72-hour window of potential sovereign debt contagion and kinetic escalation across the Middle East. The primary catalyst is Operation Epic Fury. Over 900 U.S. strikes have eliminated the Iranian supreme leadership, creating a total command vacuum in Tehran. With the leadership decapitated, the Islamic Revolutionary Guard Corps has assumed tonal state control, shifting the Iranian posture from managed containment to active military desperation. The U.S. has moved to an aggressive kinetic posture. Carrier strike groups 3 and 12, led by the Gerald R. Ford and Abraham Lincoln, are currently in launch Bravo positioning. The IRGC has responded by activating its swarm doctrine. These fast attack units are moving to block the Strait of Hormuz, intending to force a catastrophic maritime event. The removal of diplomatic guardrails has pushed the geopolitical landscape to extreme risk, setting the stage for a systemic maritime and financial freeze. The Hormuz blockade has instantly infected global markets, triggering a structural liquidity failure as maritime risk becomes unmanageable. This chart shows the insurance death spiral. Following a 400% surge in premiums, the Joint War Committee has expanded the listed high-risk area to the entire Persian Gulf, rendering non-state-backed commercial shipping uninsurable. Contagion has hit the floor. Both the NYSE and NASDAQ have triggered Level 2 circuit breakers, following a 13% drop, as panic selling decouples market prices from fundamentals. Energy prices have breached the social stability ceiling. Brent crude is trading at $162, forcing major logistics and aviation firms to declare force majeure. This is an acceleration towards systemic insolvency. We anticipate that at least one G7 member state will fail to auction its debt within the next 48 hours, ending the safe haven status of government bonds. The crisis is now moving from financial indices to physical resources. The synchronization of the Northern Hemisphere planting window with the maritime freeze has opened a hunger gap. This chart tracks global fertilizer capacity. The blockade takes 25% of the world's supply offline as planting begins. Downstream, spiking natural gas prices halt European production. EU hubs initiate Level 3 rationing, shutting 60% of non-essential manufacturing. These resource failures project a 30% reduction in global corn and wheat yields. We expect direct state seizure of grain silos and calorie-based rationing to begin by Q4. In the next 72 hours, as domestic reserves fall below 14 days, we expect import-dependent nations in South Asia and North Africa to transition to state-sponsored piracy, seizing cargo ships within their territorial waters. Simultaneously, a silent run on mid-tier European banks with Middle Eastern exposure is expected to trigger a broader sovereign debt contagion as institutional trust evaporates. Any U.S. Marine landing at Bandar Abbas to secure the strait invites a Russian theater nuclear demonstration in Eastern Europe, a strategic move to exploit the expired New START treaty and distract from the Middle Eastern theater. With G7 debt markets failing and diplomatic guardrails gone, the global system is entering a total DEFCON transition. Immediate preparation is advised.